Welcome to Key Trades on this Wednesday, the 9th of March. First up, we're looking ahead to 3 o'clock this afternoon UK time when we have the release of the NIESR estimate for UK growth and economic performance. Then 30 minutes later, the weekly release of the US oil inventories. We're looking at US crude oil. And then a trade we do not often follow here on Key Trades. It's the US dollar against the Kiwi, that ahead of the central bank decision in New Zealand this evening. But first, the National Institute of Economic and Social Research released today. It's their monthly GDP estimate. The significance of this is that the NIESR uses the government's Treasury model to assess performance within the British economy. A possible trade to watch out for on this is the FTSE 250. Here's Alastair with more.
Yes, so the FTSE 250 is considerably more of a direct barometer of how the UK economy is, rather than, say, the FTSE 100, made up of so many constituent parts out with the UK and deriving their profitability in foreign currencies, let alone sterling. So the FTSE 250 is what we're going to be looking at today, mid 250. As we can see from the charts here, there has been a broadly negative trend that we've seen in place on the 250 now for the last, well, coming on for 8 or 9 months. Also worth noting, just a shade above where we lost momentum previously on the 250, that 200-day moving average. We've succinctly broken through the 100-day moving average, and I guess there's maybe some worries that we're going to head down towards that 50-day moving average. Certainly, when you consider the RSI, we're still on the overbought side of the equation. And there are, I guess, increasing worries over the implications of a Brexit. And because of the fact that the Brexit is going to affect the UK economy more directly, it is possibly the 250 that is going to highlight those fears more directly than, say, the FTSE 100.
Then US crude oil inventories. This has been a consistently building number, highlighting the consistent oversupply around the world. Nonetheless, oil has been rising. Let's get back to Alastair with more.
Yes, crude oil inventories, once again, the fact that they are broken out of the bear trends and the fundamentals of the oversupply and struggling demand are, certainly for the time being ignored. It's also worth noting as well the correlation between the equity market, specifically the FTSE 100, and the oil prices. If we take a look at WTI on the charts, we can see in the last week it has broken out quite clearly. Once again, it has been threatening that 200-day moving average just above the $40 level, shy of $41. I think at that point in time, in correlation with the fact that it's overbought on the RSI, and the fact that the fundamentals haven't really changed. None of the major oil producers have done anything to curtail their production levels. Thrown into the equation the fact that we've now got over 1 billion barrels of oil supplies already in their global inventory pool, as it were. There are, I guess, a number of reasons why we're slightly sceptical as to how much more ground or momentum can be maintained in the oil price before the sellers start to rematerialise.
And finally, trading the New Zealand rate decision this evening. Rates there are already at record lows and the currency is often buffeted by what happens in China. But here's some analysis now with the Kiwi against the US dollar.
Yes, this is a currency cross I don't normally turn my focus onto, but certainly with interest rate decisions looming, we thought we'd have a look at it. There are implications to the New Zealand economy that aren't normally associated with the UK, livestock being primarily one of the major aspects there. As far as the interest rate decision is concerned, only 2 out of 17 analysts are calling for a cut, and that would see the interest rate drop by about 25 basis points if they were to be correct. Likelihood is we are going to see the interest rate stay at 2.5, and therefore, looking at the currency cross, this is against the US dollar. In all likelihood, we will see that lateral move in a rough broad band being maintained. The RSI not indicating it's overbought enough to warrant any necessary sell-off. I think once again we'd be looking at 69 cents being the top end of the equation and that 64 cents being the bottom end of the range.